Hey guys, very excited to have our, I think, fifth webinar today, and yeah, it's direct 1 p.m. So we probably will wait like a couple more minutes before more people join. But yeah, I think we have today the webinar on new technology brick, and very excited to have Katya joining me today on the deep dive on ZeroAvia, who had been the head of or the former CFO of ZeroAvia, and you raised a lot of capital for them, and I think you will tell more about it. And now also you're the head of the ClimateTech. So very exciting to have you. Maybe you can say some words about yourself, and then before we dive into the topic.
Yeah, thanks, Robina, and sort of nice to meet all of you. Thanks again for joining. So yeah, I've been working in climate tech now for about 10 years with a prior background in more traditional finance. My first role was as an early stage VC at Systemic. So I actually set up and then ran that investment arm for a few years, making early stage investments into climate tech companies. And ZeroAvia was actually the last investment I made in that role. And I then decided to join the company as CFO. About 5 years ago now, when the company was just 10 people. So as CFO for a pre-revenue company, the majority of my time was spent on capital raising. So while I was there, we went from seed to Series C, raising about 250 million of capital. And it was really those two experiences, both as VC at Systemic, but then also as CFO of ZeroAvia, that brought me to the ClimateTech project, because I saw how painful and inefficient the process still is, and really wanted to figure out a way to make a difference at scale to the industry as a whole. So I'm excited to tell you the journey.
Super excited to have you, and I think also for all the participants who building especially in the aviation industry, a highly regulated industry, it will be very insightful to learn more about your experience there. So just high level, what is the webinar today about? We first will basically give you a bit overview about the climate brick in general, and especially the new technology brick we cover today. Then we hear from the ZeroAvia funding journey with Katya. And then we also have a Q&A session where we would love to get your questions and address them here in the 45 minutes journey together with us. So before we really deep dive into the ZeroAvia journey, funding journey, and the critical unlocks, as some of you know the climate brick already, but some might not yet. Very high level, what is the climate brick about? It's really like an initiative we at Contrarian Ventures, together with Equity Ventures, launched around a year ago by realizing that scaling and building a climate tech company is a very different journey than building a software in a very decent or very known market already, versus in climate tech you have often the challenge to work with the regulation industry, and I think Katya there you will share more. You have to get access. You're often highly dependent on getting access to non-dilutive financing, so grants and other forms of cheaper debt, let's say. Also, you have to get and show traction to the industry, and you have to scale up your technology readiness level. So all this is a very different journey, and needs actually multi-stakeholder engagement, and it's not only this one-to-one relationship with an investor. Thus, we realized we really want to build something like a manual which helps you as founders to learn and understand what are the critical unlocks and the important steps throughout the journey to reach in order to build and scale a company very successful. And why we did this, and we look back in the past and the successful climate tech companies we could see there, we realized that obviously even every climate tech company is very different in itself, right? Like there's different technical risk involved, market risk, timing risk, need of capital. What is the mode? Is it an execution game or is it a tech game? So all this, we kind of like realized there, we clustered this different companies we have seen there over the last years into 7 bricks, depending on what I just described, like the technical readiness, the defensibility or the mode, but also the risk related to scalability of the market. And all these 7 bricks are what we present in each week to you via webinar. And today we talk about new technology together with Katya. So new technology, as the name says, is actually a brick which really describe companies who develop innovative technology. This really changed the industry. So we also had, for example, already the moonshot brick or discussion, where it was about breakthrough technology in a nascent, very new industry. But here we talk about it's an established industry which has a breakthrough innovation, like ZeroAvia, hydrogen cells for the aviation industry. So really something breakthrough innovation in an existing industry. So this is basically what the brick is about, and where obviously, like we see also in the food, archetypes, and so on, other companies developing. And so here in the next slide, you really see the brick, so everything we talked about. And this is really like, you know, the learnings and the data we analyzed from the past companies, what they have done in each steps from pre-seed to IPO or growth stage, and what they have like achieved, how much capital, how did their capital stack look like, what is their commercial traction, their product offering, their technology, and also, you know, their hiring plans, their teams, everything related to reach because you have to think this journey through vertical, but also horizontal, and really to kind of like grow your company into a successful journey. And this looks like a very dense information, so we don't want to dive too much into this template, and you can download everything on climatebrick.com. But what we have done, and there I want to spend most of the time, is really looking at an industry example, and in this case, ZeroAvia, and talk with you on ZeroAvia, the new technology brick, in order to give you more feasible understanding. So Katya, to you now, what is ZeroAvia? What are they doing? And then before that, and after that, we go into the brick of ZeroAvia.
Awesome. Thanks, Robina. So yeah, I'll give just a very quick overview to ZeroAvia, but very happy to go deeper into it also through questions later on if you have any. So ZeroAvia is one of really the leading new technology pioneers in the aviation space. The company is now about 6 years old. It's based in the US and UK, and its primary focus is to develop hydrogen electric propulsion for aviation. So it's working effectively on a new engine that powers aircraft. Initially, it's actually working with existing airframe types, so not modifying the airframe itself at all, and really just replacing the propulsion. But over time, it's also working with airframe manufacturers to modify the airframe as well to accommodate and optimize around this new propulsion type. So the high level idea is that emissions from this industry are already super high, they're soaring, there are no viable solutions today, and propulsion is really the key bottleneck. So that's where the company focuses. And also worth mentioning that in addition to the core technology, which is hydrogen electric propulsion, that means we're using hydrogen as a store of fuel, we're converting it back to electricity using a fuel cell, and then we have an electric motor. That's what's kind of in the core scope. But the company also works on the refueling side. So it's also looking at how do we actually get hydrogen to the airport at the right time, at the right price, so the airlines can use this new fuel in this new propulsion solution that the company is manufacturing. So a very novel idea using lots of new pieces of technology, so the fuel cell, but also new motors and overall new balance of plant. This technology is in use in automotive. So Toyota Mirai uses a technology not too dissimilar from this, but it has not really been tried at scale in aviation, and ZeroAvia has been really the key pioneer pushing this forward. So I'll stop there, and then we'll go into kind of bits of detail as we unpack the journey.
Perfect. And I think because, you know, you can tell, and in our discussion on Monday, we talked, there's so much we can untackle in this ZeroAvia journey. But what Katya and I thought about is that we created a pool for you guys where you can vote now. And I hope you all see the pool now on the website, on the webinar. If not, please raise the hands. Katya, can you see it?
I can see it, so
Perfect. And I see people are voting already, so it looks like
all good.
Everybody can see. Amazing. So it's good that you're voting already. So what we thought is we want to deep dive on one of these areas. And one is like, when and how to get strategic investors in your cap table, in your funding round, and how to engage also on incumbents. I mean, ZeroAvia has raised from Airbus very successfully in a Series C late round. So I think you can shed tone on that. And I think this is a question I also, as an investor, get very often asked. And it's very different from maybe more not general industries versus ClimateTech, and how valuable the engagement is here. Then obviously financing, especially non-dilutive or debt financing, how to secure it, especially in an unregulated market like the aviation, in a highly regulated market like the aviation industry, where I think especially offtake agreements are often not binding if you don't have the certificates and so on. So there are a lot of super interesting also challenges where you, Katya, can tell more from. And then also the third question or area where ZeroAvia is also an interesting case, where you moved from a product disruption to a really new technology while you had the company already running. So these are the three areas, and we have 23 people already voted. So please all give us your vote, and then we can deep dive at one of the three main areas here. Obviously, we can also, talk a little bit more on the other two topics, but we would like to focus on one to really give you the content and value we have in this short webinar. So give us your vote. We're waiting some more seconds before you have decided, and if there's a question in between, let us know. Yeah. So
how's it looking?
Yeah, you can't see it. Okay.
Oh, okay.
So 26 have voted so far. So I think, yeah, almost 2/3, a little bit more. So I think we wait one more minute, and then, but looks like most of the people want to actually talk more about how and when to work with strategic investors and incumbents.
And
so,
hopefully we'll have time for the other topics as well, but at
yeah.
least that way we start with the most pressing one to make sure we unpack that. And
yeah.
should I just start talking about that one? And then we
Yes,
can see
so
what the second
I
one is.
share the results here.
Awesome.
And then we will start with the first one. It sounds good.
Great.
And
Thanks,
I
everyone.
also opened the ZeroAvia break, where you have filled out a little bit the journey, and maybe I think high level before we start on the incumbents question. Maybe you start really about the journey, and especially the capital stack, and how you went from 2018 to now.
Yeah, and actually the strategic sort of story will very much come out there. So just first of all, disclaimers, I'm not at ZeroAvia anymore. So this is kind of a personal narrative based on my time there. So it's not kind of coming from the company anymore, but I lived through all of this. So hopefully I remember the details correctly. But yeah, so I think when I joined the company, we were about 9 people, US only. We're just starting to set up in the UK. Had done a seed round, mainly backed by our founder, who had exited his previous company in the electric vehicle charging space. And we were really in the early days of figuring out what the company is going to be doing exactly, how to raise capital, etc. And actually starting to do some of the early testing and experimentation. So I actually wanted to make the comment first about just as an overview of this kind of move from product disruption to new tech. So at the very beginning, ZeroAvia took kind of the Tesla approach of, we have a solution, so we want to build this solution for this industry, but we're not starting with a super high performing fuel cell or motor. We don't have the tech itself. That's not what we're leading with. Rather, we know what the market needs, and we want to go out there and build it. In the early days, we tested technology that was already available on the market just to see what is performing at the level needed and what's not. And then we built a roadmap for how we actually build the technologies needed for that product over time. And the story became one of very significant vertical integration, where today the company actually owns fuel cells, it owns the motor development and all the balance of plant. So it's effectively now fully vertically integrated, and therefore really is a new technology company. But that was not the approach at the beginning. So just quite an interesting sort of part of our journey. In terms of like the overall capital raising, so we lived through I think 4 rounds in the space of 2.5 years. I know partially that was driven by what was happening in capital markets. When interest rates were low and lots of deals were happening, we definitely benefited from that as a company. But then I would say the last round that I lived through, the Series C, which closed at the end of last year, that definitely also lived through sort of the trough of the capital markets when money was much harder to get. And so I think we had some really interesting learnings there. But overall, I think throughout the capital raising journey, in terms of target investors, we've always gone after, largely speaking, 2 groups. One is sort of mission-aligned climate investors, so organizations who think long-term, who understand this is a big problem, really have that climate sort of emissions abatement sort of strategy in mind, and understand that we are going to be following a slightly untraditional journey. So they kind of get this whole kind of climate brick challenge that we're talking about today. And then also strategics. In our case, they sat all across the value chain. So starting from Shell, who was a provider of today of jet fuel to the aviation industry, to airlines, who effectively are customers of ZeroAvia, and then finally Airbus, who is not a competitor directly. They're an airframe company. They don't make engines. They currently purchase engines, but they are one of the leaders, or probably the leader, in terms of incumbents in the hydrogen aviation space. And they already are thinking about building new airframes themselves. They've actually toyed around with the idea of building all the propulsion themselves directly. And so their investment in ZeroAvia was a very important signal at our Series C. But how we thought about corporates in general is, I think very early on, we realized that we need them. We're not going to be able to get this company off the ground without having them as partners and investors. But we also want to be careful in kind of which ones we bring on along the journey and when. So I'd say the first point is around that. So in our earlier rounds, we deliberately did not attract anyone directly from the aerospace industry. So we didn't have any engine manufacturers whose business effectively we are disrupting, but also we didn't bring any of the airframers early on. Because really we wanted to maintain maximum optionality and flexibility in the early stages. So we didn't want people to say, oh, Airbus invested in you, so they're just going to buy you. At the series kind of seed A, B, that definitely would have been at the conclusion. Whereas at the Series C stage, we were a big enough company that we actually could credibly work with multiple airframe manufacturers alongside Airbus, which was like important for us to retain. So that's kind of one observation. And then second, we also thought about kind of how and when to bring in our customers. So we did that around the Series B. We brought in, I think, 3 airlines in that one, and IAG was already an investor prior to that. So we had 4 major airline groups invested at that point. All of them at that point also signed a non-binding sort of a letter of intent to purchase engines from us. And again, at that point, in the absence of actual revenue, it was a really, really important signal to the broader investor community that there's real demand for this. So I guess point 1 is around kind of when you bring in which types of investors. I would say it's really important to think about in a way that does not close options out for you, either in terms of customers or partnerships or long-term exit opportunities.
And
the second, yeah, go ahead.
Yeah, maybe here, what was it? I mean, also for the founders here, what was it like really where was the inflection point where you could say, okay, this is the proof point we could show with the company that we bring a strategic investor on board I don't know, Airbus, how much they totally invested, but I don't know if you can share it, but
I can't share the details, unfortunately,
yeah.
but I mean, it was on one hand a sizable amount for this company, but for Airbus corporate, still a relatively small amount, given the magnitude.
So what
they
was
did
it
co-lead
like?
the round. Yeah, the way that we thought about it was at that point, we were already testing our first commercial product. So this was no longer the kind of pre-prototype that we were testing in the earlier stages, but this was actually the commercial product that we are planning to now certify and bring to market. And by that point, we had significant strategic interest from airlines, as well as other airframer strategic partnerships that were already in progress that basically gave us significant enough validation as a standalone propulsion player in the industry that we could sort of more credibly negotiate with Airbus in a way that didn't kind of close those avenues off. So yes, I think it was kind of level of tech readiness, and so the amount of testing we had done, commercial interest that we had secured, and then also some of the other go-to-market partnerships that we already had in place.
So your TRL level was at that point?
I think it was around kind of a 7.
Yeah.
7, 8, yeah,
Understood.
for the first product. So ZeroAvia is building a whole family of products. So the first product is an engine for 10 to 20 seat aircraft, so quite small, but it's already working on engines for the next size aircraft, which are the regional, so typically 50 to 100 seats. So these are much bigger planes. Technology there is probably TRL 3-4. So we're really looking more like a 5-year time frame for bringing a product to market there, but commercially and from a climate standpoint, that is much more meaningful. And then there's also work on airframes that go even beyond that in size, but that's really kind of further out there at this point. So most of my comments were about our first commercial offering, which is for 10 to 20 seat aircraft that are in commercial operation today, both in passenger as well as cargo, but it's not the biggest market, and it's not the biggest contributor to emissions either.
And maybe then on the earlier stages, like this Airbus as lead investor is something particular, but then also what we see in rounds early stage, and so you have like Shell, but then also Series A, Series B airlines. And you mentioned that you had some form of LOIs agreements with them. Maybe elaborate a little bit on what conditions these investments were, bind to.
Yeah, so actually the second point I wanted to make was
sorry.
No worries. It actually is about this, so it's very, very good. It's kind of, it was actually specifically like to say that when you do bring corporates in, as much as possible, make sure that you separate the investment relationship from any commercial relationship that you have with them. Obviously, a big part of the reason you're involving them is to have some sort of commercial relationship, so it's going to be there. But as much as possible, try to contract at these stages, I think, with the venture team that hopefully has a standalone mandate. Of course, they will be connected to the business units, but they will be acting as close to a normal financial investor as possible, and make sure that in the investment agreements, you don't have any weird additional rights that they get as an investor because they are strategic. So really try to separate the investment participation from any kind of commercial relationship that might accompany that. So for example, Shell and actually Amazon, they joined our Series A really as a potential customer. They're one of the largest cargo operators out there. They actually have, I think, the biggest fleet of aircraft in the US. So with both of them, we had, I think, some right of first refusal on a commercial basis, but nothing beyond that. They didn't have any kind of differentiated pricing. They didn't have first access, and they didn't have any additional investor rights by virtue of being commercial strategic investors. If anything, we actually put in various protections to make sure that they didn't get access to privileged information that might compromise some of the other partnerships we had in place. So really kind of ring fencing all of that. In terms of the airlines, so like the biggest bunch of airlines that we brought in was in that 21-22 Series B that we did. So all of those financial investments came with non-binding orders. That was a very deliberate structure that we wanted to follow, because it's sort of, we were getting the airlines to put their money where their mouth is as much as possible, because otherwise, signing a non-binding agreement, there's definitely the skeptical view of like, they're just doing this for their own marketing. It doesn't actually cost them anything. That means they can say, oh, look at us, we're buying great product, but they haven't actually committed to anything. So getting them at that stage, it would have been almost impossible to get them to sign a binding purchase order, because at that point, the technology was too far out. Its performance and economics were not yet validated. So their procurement teams would not have signed that off. So us getting them to invest financially into the round was kind of the next best thing of let's get them to commit something. So they have some skin in the game. They're committed to the company's success, and they're more likely to follow through on the commercial relationship, because they also know that they're a big source of commercial value for the company.
And was this actually also very helpful for you to get then access to cheaper debt financing, as we mentioned, having this non-binding commitments on this, or was this completely...
So I guess like generally ZeroAvia's experience, so all the comments I've made so far were about equity, right? So raise about 250 million. That's equity financing. Well, I think, sorry, like let me recheck. No, that is the equity figure. Yeah. So the grant funding was always a big part of the company's journey, but right from the beginning. But in the first few years, we got grant funding that was really R&D sort of development funding. So it was non-dilutive. It didn't have any, well, it had, of course, KPIs we were supposed to deliver, but they were not kind of commercial, and this funding was not given to us on the basis of any kind of commercial validation. It was really to get the technology developed. But as we approached production, so 2022, 23, we started the process of figuring out where we're going to get debt financing to fund the production facility. So ZeroAvia is not a gigascaling company, i.e. that the way that this product comes to market is not about building huge, production facilities all over the world. Really, the company will probably in the next 10 years only have 2 production facilities, one in the US, one in the UK, with increasing capacity. But this is not a super capital intensive scaling journey, but it's still money. So it's something in the order of several hundreds of millions. So we started the process of looking for sources of cheaper debt financing, but importantly, not just cheaper, but sources that were actually able to contract with us at this very early commercial development stage when we don't actually have a product that's in the market yet. And so there, absolutely, these airline commitments were critical because they were a sign of the size of the market, the maturity of the market, the willingness of airlines to actually commit and purchase these products. And they really formed the basis of a lot of the cash flow modeling that we used to actually pitch the opportunity and demonstrate that we will be able to repay the loan. So ZeroAvia went through a process with the Department of Energy, their loan guarantee program. It's actually still ongoing, so the results have not yet come out, but that is for the US production hub. And there's also a project with the UK and UK Infrastructure Bank and a few other parties to come up with a similar structure for debt financing in the UK. And yeah, so whenever we did the kind of market financial modeling for those facilities, the LOIs we got from airlines were a critical kind of backbone of that.
And maybe I have one last question actually on the strategic investor side, and then we will move a little bit on the other capital, what you just dropped, like the debt financing and grant, because I think there's also some interesting information you can share. From the strategic investors, I mean, I think you gave like 2 very valuable advices, getting a lead investor as late as you feel like you are defensible and strong enough actually to not rely on this partnership. And then be early on investors can be interesting if they're conditioned, especially for you to raise debt financing and having some form of non-violent commitments there. But were there also, so I think like one question is like, did it convert it? So this partnership with United Airlines and American Airlines and so on, did they convert? And then what were like maybe do's and don'ts from your experience where you had maybe also negative, but also maybe positive experience, how to navigate the partnerships here? I think also in the term sheet discussion, as you whom to give right at when is probably negotiation, which is tough. So maybe you have some things to share there.
Yeah, definitely. And I'll make the comment about airlines, but also kind of apply to some of the other strategics we had. I mean, mainly like for example,
of course.
Parts. Yeah. So when airlines, in terms of whether they convert, so yes, so with all of them, when we signed the investment agreement and the initial LOI, we thought there was kind of a schedule for what the partnership is going to look like over the next, say, decade. So how do we move from this non-binding LOI to a binding purchase order that typically comes with a deposit, to then a fully binding order that goes into production, and then kind of a longer term partnership in some cases as well. So with each airline, there were a specific sort of number of units that we were talking about, how many engines they actually plan to purchase for which type of aircraft, and then timelines associated with that. So then there was actually an announcement, I think last week or the week before, with the ZeroAvia and American Airlines. So they upsized the order as well as sort of advanced in their relationship. And with the other ones, it's not public, but effectively, yes, they are moving along. In this industry, the sales process is very slow for existing technologies, but it's obviously slower, that much slower for new technologies. So this is kind of a natural cadence. You wouldn't expect them to convert a few months later, but the relationship definitely is maturing. They are, because most of these orders are for large airlines, they are for the larger engines, so that are not yet in that late development stage. So the orders will be conditional on the technology actually being developed and actually performing as agreed. So there's that conditionality built in, as you can understand from an airline standpoint. So on ZeroAvia, it is to kind of deliver that tech performance within those timelines to ensure that the relationship continues to kind of tick along. But effectively, like the formula for the partnership has been agreed. So it's then a question of each party sort of honoring its side of the commitment in order to advance further. And I guess in terms of lessons learned, I think, some of these, signing these kinds of partnerships is helpful for fundraising, right? So it's also helpful to attract other types of investors into the round, because you can say, look, we have an airline, they're buying this, they're also putting money in, great, right? So it can definitely accelerate the round. And I think we spent probably slightly different amounts of time negotiating each deal with each party, depending on like where we were in the process. And I would say that in my experience and my personal view, I think it's worthwhile, to the extent possible, negotiating as much of the stuff up front as possible so that you don't have like surprises and misalignment of interest later. So some of these, like, for example, how does this transition from non-binding to binding? What exactly, like how many units are they really committing to? And then also getting a much deeper understanding on their procurement process. So, because quite often for the investment discussion, you'll be dealing with the venture team. They're not the ones who will actually be procuring the technology with you. So actually engaging with the procurement team early on and understanding their sign-off process, budgeting process, kind of what they're, ideally getting even their templates for like purchase agreements and what kind of clauses they put in there early on. It will just give you much better understanding of what's realistic and some more realistic timelines on how this relationship is going to convert over time as well. So that's what I would say there. And another example I just wanted to highlight also for us was Shell. Maybe not immediately an obvious partner, but they're today the biggest supplier of Jet A fuel to the airline industry. They're also separately building out a green hydrogen business. Currently, it's more focused on cars and trucks, but over time they want to target other sectors too. So they actually joined our Series A very early on because of the broader hydrogen economy story that we were selling. So ZeroAvia's story was that, yes, we are building an engine for aircraft, but actually a bit similar to like, Nespresso kind of sells the capsules, it sells the machines, but then actually what they're selling is the capsule. Same for ZeroAvia, we're selling the engines, but they're using a new fuel that we're going to keep selling. So for most of these big
oil, an amazing business model.
Yeah, not so quite as simple in this industry, but I mean the idea is like the recurring sale over the next many decades is the fuel, right? Exactly. And so that's why you have players like Shell, but also pretty much all the other oil and gas players super interested in this, and commodity traders and all these other kind of big corporates, because they're like, we see a huge financial opportunity. This industry is big, so if this technology really works and airlines really adopt this at scale, this could be a huge new revenue stream that we want to get on top of as quickly as possible. So with Shell, the partnership from early on was around, okay, how do we as ZeroAvia build out the hydrogen refueling infrastructure? Who are the right partners for us? What are realistic assumptions that we should be making about the pricing, the scale of the rollout, and how do we actually jointly develop kind of the industry-wide standards and plans for this? Because ZeroAvia is the catalyst, but we do ultimately need the whole industry to come together, the airports, infrastructure providers, etc. So they were quite good because of their experience. They were a really helpful partner in helping us to think this through. But again, with them, I think as with many corporates, quite often you get the experience that their strategy on whatever you're doing changes over time. So it's just good to be aware of that and kind of lock in commitment.
And this is actually a follow-up question here. This is interesting. Was it, because it sounds very strategic, how you choose your, also strategic investors in the sense of, access to infrastructure, partnerships, demand, indication of demand, and so on. Was it very strategic? The ones Amazon, Shell, and the airlines you reached out to, and built this up, or was this also a little bit on, like what came basically to you, or was it planned from beginning?
I mean, it's definitely a bit of both. You can of course tell the story afterwards in a much
it's
more packaged way.
That's what
No, I mean, the reality, look, we realized that like back in especially 2019 when I joined the company, like there was not a lot of capital going into the space. At that point, it was kind of in the box of this is probably just too difficult. So let's not kind of bother. Let's look at automotive, trucks, other areas that are easier. There was a little bit of activity, but quite little. And there had been a couple of companies that were burnt. So that kind of really set people back. So we were just being realistic. We're like, okay, we have to go to investors who care about this for one reason or another, either because they know that from a climate standpoint, we have to do something about this industry. So that's where Breakthrough Energy came through, because they got it. They got that, yes, in the next 3 decades, if we don't solve this industry, we're not going to get any of our commitments in place. And then who else cares about this? Well, it's the industry, because there's, there is government pressure, there's consumer pressure. There are, various regulations coming in place that are going to put pressure on the airlines and from manufacturers. So they care about this. They know they're going to have to do something different. Obviously, right now, there's a lot of activity around clean fuels, but that alone is not going to get us to net zero. So we try to think cleverly about like who are the people that care the most, that actually would want to collaborate with us, rather than kind of get pissed off by whatever it is that we're developing.
Yeah.
But so I think we went to a broad range of corporates early on, but we had some criteria around like what would be the best configuration for us and what we would like to get from them in exchange.
No, super, super helpful. I think also for the founders here. You mentioned or have on the top, and we have this for each climate break, 3 main critical unlocks, which you described really help like to bring the company to the next level. One is establish IP modes. The second one is establish market demand, which we covered a little bit so far. And then the third one is prove high technology readiness. I want to deep dive a little bit on the third point, as this is, I think, something for a lot of founders, a big question, how to show the proof points, especially if you have always small portions of money. So I think I would like to stick on or deep dive on point 3 in combination also to your capital stack and access to the financing in order to show the demos.
Yes, it's a very, very important question especially for this industry. So I think, and I won't say that we nailed it all throughout, but I think we learned a lot, and I think we did a lot well during this time frame. So I think, and aviation is particularly difficult here because doing a demo is super expensive. So to demonstrate anything takes months and it costs a lot of money. So kind of which demos you even choose to do is a big sort of strategic question. And we learned a lot there because, we were also looking at experimenting in different geographies that have different kind of costs, et cetera, associated with them. But I would say overall, our approach to this was we know that showing people something real gets them excited, like at a very basic human level. So you can show all the slides and all the models and all the demos, but being able to actually show a product that's doing something real, even if it's not quite the right version of it yet, kind of really puts you into a different bucket. And so I don't have a picture of this in this presentation, but one that we especially used to show very early on is our first demo was actually a car that had a humongous prop strapped onto it. All right. And the prop spun using our tech and the car moved. So it was not a plane.
Nice.
It was on the ground. It looked super like, kind of like ghetto old school. It was literally a car with a prop strapped on top of it. But
that's very creative.
The point is we demonstrated something, right? So we did that for the first product. And then for the second one, we followed the same procedure, but we got a huge truck that again had this prop on it. And, the point is we were able to generate the power of the technology that we were testing. So overall, we thought, okay, how can we test in as frequently, but in as low cost way as possible so that we keep showing progress, especially at times when maybe capital was, harder to get, it was taking longer, like what can we keep feeding the market to show that we're still moving ahead? And so I think what we learned a lot about is how to do this testing. So testing in the air is sort of gold standard. Obviously, people love a flying plane, but that is very expensive. And especially if you're doing it in the UK, the regulatory sign-off you need to just fly an experimental aircraft is very significant. And so you can't do that for every iteration of the technology that you do. You'll spend decades just testing it. So we tried to have the right mix of ground testing of components individually on cars, for example, a stationary ground testing of individual components, then actually ground testing on aircraft, which is less expensive and you don't need all the sign-offs for it, and only then air testing for kind of some of the key design configurations that we thought were really important to test out. So we had like a really robust sort of pipeline of milestones that we could test over the next 2 years. And we very deliberately thought, okay, we're going to be raising around. What can we show right before we start? And what can we show during a round to kind of really catalyze interest? Because we know that investors care about this. So we were very kind of tactical. I mean, of course, things don't always happen on time, et cetera, but we tried to be very deliberate about like what we're testing and why. And again, our approach here was also very we call it deployment-led innovation. So we tried to just really show things in the market as much as possible.
Super interesting. So it means really you break down the specific components or areas you want to. Katya, are you still there?
Yeah.
Okay. I kind of lost you for a second.
Sorry, I don't know what happened. I'm here.
No worries. Maybe it's Wi-Fi. But anyways, so so it sounds like you really broke down the specific areas, components as you described, according to cheapest costs, and then the most important part you could show. This may be on the product level, but you also mentioned something interesting about the geo. part. And
Yeah.
what would you advise founders there, and how do you think is the best? I mean, it's a US UK company. How did you decide to basically spend most of the time of testing in the UK versus US? What was the reasons here? Or maybe it
Yeah,
was.
so I think we actually, again, personal view here, but I think we underestimated how difficult it was to do aircraft testing in the UK when we first. So we were initially based in California, then we got grant funding in the UK, so we moved a big part of our development here. And since then, since 2019, a lot of the primary development and testing has been going on in the UK. A big driver for that was the grant funding, and I think we hadn't fully appreciated how much more difficult it actually is to do aircraft testing in the UK. This is quite an aviation specific comment. I don't know if there are any similar kind of trends in other areas, but in our case, that was definitely something we learned. So actually in the US, it's much cheaper and easier to do experimental testing. You just get a license and you get an area that nobody lives on that you can go and fly as much as you want. That is not available in the UK. So certainly if you're an aviation startup, like definitely think about that. And I would say that a lot of the ground development and testing is good to do, well, anywhere, but if you have good talent in the UK, that it's a good location. But if you're going to be doing a lot of aircraft testing in the air, then US is a much better place for that. But important then also to think about where are your customers, where are you going to be certifying and introducing the product and producing it, because again, in aviation specifically, there are very strong links between all of that need to be thought through early on, and it's something that we learned a lot about as we went on. But just kind of back to the overall testing strategy, I think it was, I also want to make the comment that, you'll see in the first couple of years, we focused primarily on the 6-seater. From the beginning, we knew we weren't going to commercialize that. So a question could be like, why did you bother developing a product that you weren't going to commercialize? But again, it's coming back to that deployment-led innovation, because we knew that if we started working on the 100-seater, it's way too far out. We wouldn't have anything real to show. There's so many things changing in the industry all the time that we would end up wasting a lot of time developing the wrong thing. So we rather said, okay, we have some components, they work, let's just put them together, let's fly whatever we can with those at this point, and then let's keep scaling up, rather than let's design straight away the perfect product that has the biggest commercial opportunity, but is going to take 10 years to bring to market. It's quite hard to strike that balance well, because sometimes you could end up spending too much time and money developing something that you're not actually commercializing. But I would say ZeroAvia has struck that balance quite well, in that all of this early development and testing really created market interest and gave the company credibility of, we actually have a flight tested product. That's a very important thing to be able to say in this industry, in the absence of revenue and a fully kind of certified product. And the other kind of comment I want to call, which is something I called out on the slide here, so component sales. So this is a bit of a mix actually of the two unlocks. It's a bit of a blend of established market demand and proof high tech readiness. But and this really came out, I would say, of the Series C fundraising process in 21-22, when investors really shifted away from pre-revenue companies, and really wanted not just kind of LOIs and not just proof that the market might exist, but actually wanted revenue. And so, we thought, okay, well, we have pieces of our technology that actually are quite developed and quite mature. Should we start selling those separately in order to demonstrate kind of a nearer term market that can get us over that hurdle? I think it's important to be careful about that, because it can be seen by some investors as like a distraction or a signal that your core product maybe is further out than you thought, and so you're trying to scramble and kind of sell into other industries. But I think if it's executed well, it's a really smart strategy, because it can help you monetize development work you've already carried out, and especially if it's in kind of markets that are not too far out, it can actually also help you continue ongoing development. So that's something that ZeroAvia officially launched this year. So it's actually selling the motor separately and the fuel cell separately before it's selling the fully integrated engine, which takes longer to package and longer to certify as well.
No, I think it makes a lot of sense, especially in this revenue sensitive investor environment. I will open the question now for the audience, given that we only have like a couple of minutes left. So if there are any questions from your side to Katya, and on the aviation industry scaling and building, please post your question now here in the Q&A section, and we can then answer them individually. I don't see questions yet, so if you don't have any, then maybe just a last question from my side. Just maybe because we only have actually 1 minute left. I think it would be nice if you could end your 3 most important lessons learned and advice to founders. What you would give them. I think you gave a lot of good examples. Maybe you can there's one question finally coming up, but that's good. But then let's open this question. Now there's coming a lot of questions. It's always the first one who's coming. Can you actually, Katya, can you also see the questions?
Yes, I can. So I could just, should I just go through them quickly? Because I know we don't have time. So
yeah, I'm thinking about what are, so.
They're all good questions. So
yeah, I think so too.
Yeah.
Corporate relationship what are the, maybe let's start with the first one. I think that's quite, or what are the key arguments you gave to corporate investors to keep the relationship mostly financial versus business? I think something
Yeah, well, I think the key thing is that we had both relationships, but it's to separate them so that they're not interwoven. So you don't have, so the fact that you're going to have a commercial business relationship with them doesn't impact the terms they get as a financial investor. So the financial relationship should be with the venture team that has a financial investment mandate, and the commercial relationship should be kind of documented separately and not impact the other one. So let's try to separate them as much as possible. And the argument there is to not crowd out financial investors, because as soon as you get strategics that are getting a better deal, that puts financials off. And ultimately, the strategics don't want that for the company long term, because they are putting money in. They want that money to be worth something. They know that they need financial investors to invest in this over the long term, and effectively they're going to be crowding them out themselves, which is not good for them. So and most corporates recognize that, and I think sort of honor their role. Shutting down of universal hydrogen. So they were a competitor of ZeroAvia's for quite a few years. Not actually a direct competitor, because they were focused initially more on the refueling capsules, and then they kind of went a bit more into propulsion as well. But I think it's a really good example of kind of lack of product market fit. So they tried to do too many different things. They were first looking at the refueling logistics, then they realized there actually isn't a market for that yet. So they then went into doing the propulsion, but they didn't have any technology of their own, so they worked only with partners and didn't do that kind of product disruption to new tech transition. And I think that really hurt them. So I'd say, kind of lack of focus and kind of lack of kind of real market for what they were building. I think I would say it's net good for ZeroAvia. I mean, whenever a company goes under in a particular space, it always raises investor sort of a nervousness level a little bit, because it's like, oh, is it hard to fund? What's going on? Are there going to be others? But I personally think it's a sign of consolidation and a sign of strength for ZeroAvia. And I think there were specific tactical mistakes the company made along the way that unfortunately resulted in this.
Then Ye asked, what would you like to see more from growth late stage investors spending time in the space?
I think for me on this one, that's probably the reason I wanted to work on the ClimateTech project, which is I think we got too many, late stage growth investors like not really having a clear strategy for how they want to look at climate tech and what kind of risk they're actually prepared to take. So we had quite a few processes where for months we'd spend time together doing diligence, and then 3 months later they're like, oh, you're pre-revenue, sorry, we can't do this. Well, that was pretty obvious right at the beginning. We didn't create any expectation that was not the case. So I think it's kind of a more honest articulation of like, what actually is your investment strategy? What type of bricks do you invest in? At what stage? And what do you expect the company to have? So a more honest articulation of that, and just a kind of clear way of communicating that to the companies early on, so we don't waste time on that kind of inefficient potential matchmaking at the beginning, and really only engage in diligence if there is that kind of high level fit on what the fund's mandate is. So I think that for me, that was kind of the main takeaway. And I think some funds do it well, but a lot are still kind of figuring it out. And I still do spend time on things that are around the edges, which often does take a lot of time from founders. So I would just really encourage investors to try to limit that activity.
Then there's also a personal question to you. I don't know that now it's I don't know how much we have able to cover. Do you have a little bit more time, Katya? 2 minutes?
Yeah, sure. Yeah.
Okay. So what was your decision to move? Maybe Also, why did you
Yeah.
want the climate break?
Yeah. Well, I think the question is like, why did I decide to take time off? And
Time
what were my
off, yeah.
biggest takeaway during my transition? So very happy to share that. It's my favorite personal topic. But no, look, I think I believe that having now had my experience, that it's really important that we all take breaks certainly between intense roles. But no, I decided to move on from my role because we had raised Series C and the company was getting into that kind of regulated, certified production stage. And so the CFO role was starting to look very different. It was much more focused on kind of internal finance and getting ready for a potential IPO, which is in my skill set and kind of not the direction I wanted to develop my career. I really enjoyed the early stage, kind of the more generalist part. So so at that point, I realized that I wanted to move on from the company. But I very much strongly felt that I wanted to conclude that part of the journey before figuring out what I want to do next, and that I really want to take time off, because being in an early stage operating environment is really exhausting. And I think especially when you want to do something different, it's really important to create some space in your life to think about what that might be, rather than jumping into the next thing, because I think you're much more likely just to do something very similar to what you did before. So I probably would, if I was looking for another role from ZeroAvia, I probably would have gone in as CFO of a Series A company. And actually, I realized that's not what I want to do next. I want to do something at kind of a greater scale. So I'm a really big proponent of career transitions and using that time to do kind of deep self-reflection and figuring out what you learned, who you are now, and what you want to do more of in your next phase.
Definitely. Breaks is very important. And then scalability. I think we covered this a little bit on tech readiness, but now here the question on passengers.
Yeah, so I think again, it's a bit of a balancing act. So when you have a product family, so we're introducing the first product for 10 to 20 seaters, but we know that the market cares somewhat about this, but that kind of the larger aircraft is really where the commercial opportunity is. So how do we demonstrate credibility in that segment? So the way ZeroAvia did it was, on one hand, by kind of generating that market appetite from airlines to show that airlines need this, they really need a solution. And then on the other, short of actually having the full tech ready, doing that kind of early development work on an ongoing basis to show that the technology can actually scale there. So we pinpointed what are the key kind of tech unlocks that allow us to get to that next product family, and how can we start testing them initially at lab scale, then at kind of smaller ground test scale, and then full kind of aircraft integration scale. So it's kind of that same deployment-based innovation approach, and running actually those two programs in parallel. So not saying let's finish one and then start working on the other, actually really running them in parallel, because we knew that the larger aircraft, which were a really significant kind of value unlock in terms of the proposition to investors. So kind of keeping that moving along and really focusing on like what are the key bottlenecks, and how are we as ZeroAvia best place to solve them.
Amazing. Great. I think we have all answered, and we also run a little bit over time. Katya, it was amazing to have you. I think we learned crazy lot and super exciting. And I think there's even more to unpack of this company journey. Thank you also, all the audience, for joining Katya and me here on this webinar of new technology. You can download the breaks and the report, which also explains a little bit the logic and the methodology behind the data, on the climatebreak.com, the website. On the top, you can download the report or the paper. And please reach out to Katya and me if you have any questions, ideas, or want to get engaged and get used to work with us. Thank you guys for joining us. And we will kind of have almost every Wednesday the webinars. So also follow us on LinkedIn and check that out, and be part of our journey.
Yeah, thanks, Robina. I think we're taking a short break, possibly over summer, but we'll come back with more webinars.
Yeah, we try. Let's see. But yeah, have
awesome.
a good day. There's one.
Great.
Yeah.
Thanks for joining, everyone. And yeah, please reach out if you have questions.
Thanks. Bye-bye.
Bye.